Hello everybody, welcome in. This is one of my favorite videos to do. It's pretty clear I love these I Got Challenge series, and I want to thank everybody on Patreon for keeping me challenged and keeping me on my toes. It's so important. But this one's special because for the first time ever, I am in violent agreement with the person that challenged me, which means I must be doing something right. People are looking at the right things when it comes to analyzing a token. And this also helped me identify if I'm overweight or underweight on MATIC right now. So thank you so much. Let's jump in. This is edutainment and how to challenge me. You can challenge me on Patreon here. Either the top levels can come in and just challenge me. Top 3 levels. Can do it. Now, Patreon member is Gnarly Quinn. They challenge me. Polygon MATIC, it's not worth it, and here is why. Very interesting. I've always spoken about, MATIC being the 4th best token, but why? But let's dig in. And why do I own as much as I do? I'll talk about exactly how much I own compared to all my other crypto at the end of this video. So first of all, the first point is inflation is too high. Staking rewards pale in comparison to the supply increase. So there is a significant discrepancy between the inflation calculated by Messari, CoinGecko, ETHPlorer, CoinMarketCap, etc. Staking rewards are average about 7.1%, which is below the stated inflation value. So it's a problem. Even if I go by the stated value, holding the token still loses 6 to 7% of its worth every year, even if the price doesn't change. So this is a tricky thing, and you can see the supply today, supply last year. Thank you and congratulations for doing the calculations. Amazing work. And yes, numbers can be all over the place. But first of all, we'll do the simple one. Go back a year ago, go to today. The inflation over the last 12 months is exactly 21.9%. So yes, you are correct. But there's a difference. A lot of the full vesting and releases have actually happened. The only key piece left now is, I think, staking rewards into the future. And if we look at the current Polygon inflation per Messari, you can see here ranked number 10, the inflation is at 2.25%, right under Dogecoin 3.78%, and above Solana 5.64%. So you can see the current inflation, assuming the Messari numbers are correct, is actually a lot less than it was over the past 12 months. And inflation is a moving target. It always changes, and you've got to look at the release schedule. So yes, it was high the last 12 months, but no, it's no longer that high, according to this data. Next question is false TPS, which is transactions per second narrative. What they claim it does, it is not what it does. So Polygon claimed it achieved 7,200 transactions per second during stress testing of a MATIC network, CS 2008 testnet. As adoption increases, the number of transactions increases. Often it leads to long processing times. Now, Polygon did claim they had this very high speed, and looking straight at the data on Polyscan, the actual TPS rarely exceeds double digits. Average is a mere 36 transactions per second, or 0.5% of the actual TPS what Polygon claim. And while this is faster than, say, Ethereum, Avalanche, or Cardano, it pales in comparison to the processing speed of other L1s like Algorand, Phantom, or Ripple. So let's jump in and dig into that a little bit. Now, I like the way you're thinking. This is the current TPS from one source today. You can see here Polygon, it has the number of dApps, etc., and the transactions per second. Right now, Ethereum's running at 11.2 TPS, and MATIC is running at 34.9, which I think, let me just refresh my mind, 34.9, you said 36. So we're very close, 34.9, 36, close. But let's test it another way. Let's go look at this. We'll go look at Artemis. And here you can see the number of transactions per day as of the 25th of January 2023, the most recent numbers. I plugged in Solana, Polygon, Ethereum, and Cardano. You mentioned Cardano to calculate the transactions per second. Yes, According to this method, we come up with 34.7 transactions per second. That is taking the 3 million transactions per day and dividing it by 86,400 seconds, the number of seconds in a 24-hour period, and we get exactly 34.7. So yes, those numbers are correct. And yes, you are right. The transactions are lower than expected, but you got to remember, a test net is very, very different from a real world situation. And also it needs a lot of demand to be able to run at that scale. So it doesn't invalidate the fact that MATIC could run at 7,200 TPS. But let's go a little bit further. Decentralization. There are currently less than 100 validators in Polygon, which gives it a Nakamoto coefficient of just 2, according to Nakaflow. This is less than the level of decentralization of Binance. Just 2 validators have enough control over the entire network to take it offline or produce false blocks. And this is very, very important. And of the top 20 cryptos, Polygon is the most centralized chain by a considerable margin, and you are dead right there. And this is one thing that I look at. The Nakamoto coefficient, and congratulations to you for doing that. Here are some of them as well, just so people can see. You can see on the left, according to one source, the ultimate, Solana was 27, Polkadot 82, Avalanche 28, and the rest are all single digits. And you can see MATIC is there at number 3. But according to the one on the right, which I prefer, you can see the numbers are a little bit different. Polygon is 2, Solana is 31, Avalanche is 29. That is a more accurate measure. And yes, it is not decentralized, not by any stretch of the imagination. So you're dead right there. Now, one thing that is important is while Polygon is not a standalone blockchain, it is considered more centralized, obviously, because it relies on a small set of validators to secure the network. But Ethereum uses a decentralized consensus mechanism called proof of stake. So it is a little bit different because MATIC is running off of Ethereum, but you're right, it still is very centralized. Next is the degenerate founder. Polygon's founder, Sandeep, to put it lightly, is arrogant. He regularly trashes other blockchains, and his top 3 pinned post on Twitter is all about he will not rest until Polygon takes the number 3 spot. An admirable goal. But when the leader spends more time on Twitter displaying degenerate behavior, I find it a significant concern. Also, if the founder wants to spend all his time on Twitter, I'd want to see them talking about the crypto space with positivity and answering questions to clarify misconceptions. What I see from Sandeep is desperation and consistent attempts to become significant in people's eyes. So I'm not here to defend or criticize anybody, but I will say a couple of things. One, Sandeep may have somebody managing his social, but maybe not. I know people manage my email and stuff like that, so I personally don't do it. And also, you could say it only takes a second to tweet or retweet. And I pulled up the average amount of time the average Twitter user spends on Twitter every 24 hours, and that's 17 minutes. I don't know if Sandeep does more than that or less, but again, it may not be that bad. And some people may have a poor method of delivery on Twitter. Sometimes I'm kind of playful on Twitter. That's where I go for fun. So maybe he does the same thing. Next is ownership concentration. Whales hold roughly 85% of the supply, 85%. Retail is insignificant in Polygon. We're still the top 12 wallets control 68% of the entire supply. Put another way, no more than 12 people own 2/3 of all MATIC. And this is all very, very true. Seen and spoke to this many, many times. Here are some images that show the whale concentration owning 68.33% across 12 wallets. But what I did was I looked at it a little bit different. To get to the 86% that you mentioned, you got the whale 69.54% plus the investors, which have big bags as well, 16%. And those combined, yes, I agree, own 86%. And only 14% are retail. Now, when I compare this to ETH is not 86%, it's 40%. Even Doge is 65%, which has a huge whale concentration, so it's less than Doge. So you're right, another red flag. Another point of agreement as we go forward. Next is reliance on Ethereum. Polygon will fail without Ethereum. These are the words of the CEO, Sandeep. Ethereum is likely not going anywhere, but with the rising success of competitive layer 2s, Polygon is still in an uphill battle to stay relevant here. Aside from that, if ETH ever does accomplish scaling, it will render the layer 2s redundant and they will go obsolete, Polygon included. To be successful, a project must stand on its own, and Polygon is too closely tied to Ethereum to be considered an independent entity. Any significant challenger to Ethereum will subsequently impact Polygon. And again, this is right. So let's go. But a couple of things just to point out. So Polygon does rely on Ethereum for underlying infrastructure and security. And yes, it would not exist as a standalone chain. But it's important to know that Polygon is now a multi-chain network and it can connect to other chains as well, which means it can theoretically operate on other chains. But its main focus and its design is to work with Ethereum. And the odds of Ethereum failing are very, very small. So from that perspective, we agree, but it's not a deal killer. Now, you did mention one thing, competition. And this is, well, first of all, it goes back to the religious discussion. Do you like modular blockchains or monolithic? And this is where this all comes down to. So one of the things I don't like about all the layer 2s is how do they derive value from the mothership? But let's look at the competition first real quick. I pulled up a couple again from Artemis here. You can see the competition are coming fast. This is TVL, just for example. You've got Polygon has $1.2 billion in TVL and Arbitrum have $1.2 billion in TVL. They've already caught up in a very, very short window of time. Optimism, 680, just a little over half of that amount. So the competition are coming, and you're dead right. It is a concern. Let's talk about the biggest competition. We'll drill more into the competitors in a second. All cryptos are essentially in the same sort of competition with each other. Due to the rationale, goals, and purpose of the blockchain, the biggest competitor to Polygon is likely Arbitrum. Bingo! Arbitrum is a cheaper and faster layer 2 on Ethereum and is already increasing its share of transaction and TVL over Polygon. But on the flip side, if Polygon decides to pursue the narrative of becoming its own layer 1, its biggest competitor is now Ethereum, which it currently relies on to work. Probably not the best strategy to bite the hand that feeds. I love that. I love that. So let's talk about some of the competition and how they stack up. So here I put together a little table of Polygon, Arbitrum, and Optimism, launch date, etc. You can see Arbitrum and Optimism are very new. The founders, Stephen Goldfeder and Jinglan Wang from Optimism. The consensus method, Polygon is proof of stake, Arbitrum is proof of stake, and Optimism is an optimistic rollup. The architecture, all the same, multi-layer, etc. Scalability, same. They're all layer 2 scaling solutions. Now, when it comes to transaction speed, again, we talked about transaction speed at the beginning, 65,000 TPS. The theoretical, not 2,700, not 7,200, whatever. They did say 65,000. So I took it as gospel. Arbitrum say they can do 40,000. We don't know. Optimism, 2,000. That's a concern for Optimism down the line because 2,000 isn't going to cut it in the future, in my opinion. And then we look at active addresses. We've got 344,000 on Polygon, 45,000 on Arbitrum, and 26,100 on Optimism. So the thing here is Arbitrum is growing very fast. The TVL is mind-blowing considering how young they are. TPS seems equivalent between Polygon and Arbitrum, but Arbitrum offers 100 times the throughput with only 2% of the fees. This is why I believe Arbitrum will start taking market share from Polygon as they go forward. Now, let's have a quick look at some fees here. This is the MATIC fees compared to competition, but it's everybody as well. You can see Ethereum, the amount of fees they make. The middle column is the fees per day. The column on the right is the 7-day average fee, which is good to get a feel for what's going on. You can see the money that Uniswap and GMX are making. Quite spectacular. Then you look at Polygon making about 56,000 in 1-day fees, and Arbitrum 50,500. So it's very close to the amount of fees in Polygon. Solana's there with 45,000, but of course Solana is so cheap they make it up in volume. And Optimism is down there at 42,000. So again, Solana makes more fees than MATIC despite being so cheap, and Arbitrum is catching up. That's kind of the big takeaway from this particular slide. Let's look at L2 fees. This is what rollups pay for Ethereum security, and Arbitrum is paying the most, nearly $31,400 a day. Optimism, $27,000. Then you got other players down the line. What is interesting as well, Polygon Hermes is only paying $45, so there was a lot of hope for Hermes, but it looks like it's not going anywhere fast, which is not good. Let's talk about this one here. The conclusion that you have is it's not worth it. Every time a new partnership is purchased by the company, the price goes up. To return to its all-time high, it only needs a 3x, and this is only a small gain to the upside, but with the whales holding 85%, there is a very high risk to the downside. Unless you are actually using the chain, the risk-reward ratio for holding the MATIC token is simply not worth it. Wow, brilliant. So impressed. Let's look at the chart. Polygon, the upside to the all-time high, is only 140% from here. And I know 140% sounds like a lot, but when you look at other things getting back to all-time high, like Solana would be 11x. This is a 1.4x. So you can make a lot more upside with other names out there. So you're dead right. Now, the other big question is, how much can they make? So currently, I think the market cap to Ethereum is about 4.7% of Ethereum's market cap. Call it 5%. So it's 1/20th the value of Ethereum. How far can it go? Maybe to a 10th? Maybe not. So this is in line. Let's, though, talk about a couple of things that are very positive about MATIC, and we get to the conclusion at the end. My conclusion. First of all, Polygon DeFi is very impressive. You got Seller Network, 1inch, etc., Stargate. Again, a lot of up-and-comers coming in here, which is pretty impressive, and the volumes over the past week. In addition, Polygon Partnerships are mind-blowing. You did mention something correct, though. They do pay to play, as I say. They pay for partnerships. They pull some NFT programs away from Solana by paying $5 billion or something, which I don't think is the way to go. That's not sustainable. Projects must go to the best blockchain, in my opinion, not be paid to move. But look at some of these names here. Nike, Starbucks, Meta, Coca-Cola, Amazon, Robinhood, Mercedes-Benz, Reddit, Opera, the browser, Adobe, Bentley, Prada, big names, NFL, Liverpool Football Club. That is impressive. So their BD, Business Development Organization, is second to none. And that's also a positive. But getting back to my conclusion, first of all, I'd like to say, Gnarly Quinn, unbelievable work. And you and I are exactly on the same page. In terms of how much MATIC is of my current portfolio, I only hold 4 crypto names. That's it. And MATIC makes up 0.25% of my portfolio. So it's completely non-existent. It's a tiny little dabble. I grabbed some a couple of weeks ago. But we agree on 7 of 8 of your points. The only one that we don't really agree on is the social, which I'll let that slide out of respect for Sandeep. But that is a new record. So amazing work. Thank you so much for this. This is going to be super helpful to the audience out there. You did amazing work and you speak the same language as me. So thanks again. Thank you to everybody out there. Hope you enjoyed the video, and I'll see you all tomorrow.